Well, what 24 hours it has been with earnings. We're going to talk about Meta, PayPal, Pinterest, TikTok today, a little bit more detail on them earnings. But it just continues again tonight with the likes of Apple and Amazon. So yeah, it's going to be a big another 24 hours coming up. But we're going to talk about last night. Now, I know last night I did a live stream, which was really good to do a live stream again. And I was kind of talking about when the earnings were coming in, my initial thoughts on the earnings. But now I've kind of had a bit of time to go through some of the earnings, go through the press releases, and get a bit more thoughts on the earnings, the share price movements, and what potentially caused them share price movements. And today we're going to do all that for you guys. Now, just a little bit of a disclaimer, I still haven't had time to go through the earnings in full. So there could still be a few details that I have missed, but I will be doing them in the next few hours, going through the conference calls. That is, the reason why is because unfortunately the stock market on the US side doesn't favour us UK investors like the US investors, because for us, when the US market shuts, it's about 9 o'clock at night, and by the time the earnings come out, then you talk about 10 o'clock, and unfortunately by then I have to go to bed and go to sleep and get ready for work the next day. So I am currently recording this half an hour before I do go to work on Thursday morning. So yeah, as the day hopefully goes on and into the evening, I'll start going through a few of these conference calls. So yeah, us UK stock market investors on the YouTube scene have unfortunately a bit of a big massive disadvantage to the US investors, because obviously the market shuts at 5 o'clock their time, and they've got the whole evening to go through all these conference calls. For me, unfortunately I can't go through them as quick. So yeah, I will be doing that in the next few hours, but I thought I'd just make that very clear. But yeah, we'll go through some of these earnings that reported in the last 24 hours, in particular Meta, PayPal, Pinterest, TikTok. Those are the four that we're going to be going through. So let's start off with Meta. One of the stocks I own, currently a stock that I'm trying to build up into. It's already one of my biggest positions in my stock market portfolio, but I was trying to build it into potentially number one. It's a stock that I really like, especially down at these sort of valuations, and the stock is currently up 18% after hours. Now, when Meta's earnings actually came out last night, I looked at them and thought, they're okay. I saw the numbers and I thought they're okay. There weren't numbers that kind of made me go crazy, but there were numbers that I was okay with, 5 out of 10. Revenue was a bit in the mid-range that we were expecting, so at least it wasn't in the bottom side of the mid-range, down at that 3% growth. But however, it wasn't into the 9, 10, 11% growth that I was kind of hoping for. So it was okay. Net income wasn't too bad once again, and they did say that they did see a little bit of a slowdown in the back end of the quarter. So maybe if there wasn't the slowdown in the back end of the quarter, we might have actually had really good numbers from Facebook. Now, I was looking at the numbers, and then I was looking at the stock price movement, and I was thinking, okay, we're up 18% here. There must be something I'm missing here from these earnings, because from what I could see, these earnings for me were just okay. Like, if someone showed me these earnings and then go, guess what the share price did? I'd have said it's probably flat, and it's up 18%. And I've been trying to figure out why the jump is, and at the moment, I'm still not sure. I'm still not sure why it's jumped up so much. One of the things that potentially might be why this is happening is because monthly active users weren't too bad. They were actually increasing back in the right direction. Now, something like a Facebook is very important to still have monthly active user growth. Obviously, it says that your platforms aren't dying, and also when users come onto the platform, that gives Meta, Facebook, more users to use advertising to. So potentially that is why the stock has moved up so much, is because people were, when we look at Meta, it's down at 12 times earnings. People or investors and Wall Street have been pricing this platform into prices where it's self-destructing. It's a dying platform. Facebook is not going to be successful in the next 5 years. Instagram, same again. It's peaked. That's what investors were valuing Facebook and Meta at. Maybe the reason why this has popped so much is because it was so negatively valued. The thought that Facebook and Instagram was dying, and that Facebook have actually come out, or Meta's come out and put okay numbers in, and the user numbers are actually pretty decent. Maybe that's why it's jumping so much. And it's not just because the earnings are good, it's just because of how negative the share price has been beaten down. And it's a worst case scenario that's being priced in. This is 12 times earnings. I mean, if we look at Coca-Cola, Coca-Cola is trading at something like 30 times earnings. So, for example, you could be buying a stock like Meta, where you are getting maybe not this year, because of obviously a lot of things that are going on with the platform, but historically, absolutely amazing balance sheet, generates good amounts of profit. Obviously this year, and the thing as well with Meta is that I actually looked at the guidance, and the guidance for actually Q2 wasn't that good either as well, which is probably worth saying. But apart from this year, it's a platform that's going to be growing at very good rates, probably double-digit percentage growth. Probably going to generate good amounts of, well, it already generates good amounts of profit, but will continue to grow that profit after the next kind of few quarters. And what you think you're getting here, the amount of cash they're generating, the amount of share buybacks they're able to do, maybe this is why it's probably jumping so much. Like the actual earnings, when you look at the numbers, when you look at the guidance, not great. It was okay. It was okay. User growth looked decent, and so that's probably why I'm seeing Meta in the moment jumping so much, is because of just how negatively priced it's at. That's my feeling, because the earnings, in my opinion, weren't that good. So that's my thoughts on Meta and why that's jumping up so much at the moment, which is actually probably a little bit frustrating, because I would not have minded to buy a few more shares in this one. Next one is Pinterest, so a bit similar to a Meta platform, obviously a bit of a social media play. Same again, this stock was up 8%. In fact, look at this pop up here. The stock was actually popping up 17% when these earnings came out, and then it slightly downtrended as the after hours went on, so we'll see where this goes in the day. I think this one could have a bit of volatility on the share price by the time the market opens. Pinterest, they beat on EPS, they beat on revenue. Same again, it wasn't blowout numbers. Maybe on the EPS side of it, it was a little bit better than what was expected actually, but there weren't crazy numbers. 18% year over year growth. And when I was on the live stream, I was looking at this and going, I don't know why this share price is up again. I was a bit unsure. Now digging into what I think is causing this jump here is because, once again, big thing with social media plays is the monthly active users, or whatever metric they use, daily active users, monthly active users. Monthly active users on Pinterest, the numbers actually in this report weren't that good, and I was really surprised to see it going up as much as this. But actually, when you look month over month, it wasn't too bad. And the thing is they actually came out and said, oh, we probably see user growth start going back in the right direction in the coming few quarters. So once again, I think this was management's comments on the monthly active user growth that is potentially why the share price is going up. Because Pinterest itself isn't, once again, it's not too badly valued at the valuations it's at. That's what the key thing is going to be. There's a lot of negativity priced in. And the thing with Pinterest is that very much different to like a Meta. Meta already monetizes their users so well. It makes good money off the users. Pinterest don't do that. Pinterest at the moment have been very bad at monetizing the users they do currently have. And that's why Pinterest at the moment is growing at really good rates, is because it's monetizing the users they have, especially on the international side, and getting more money from them. So that's where Pinterest is really ramping up its profitability and its revenue growth. However, once again, further down the line, what do Pinterest need? They still need users coming to the platform, gives them more users to advertise to, obviously. So the fact that monthly active users are moving back in the right direction is probably why this one is having a bit of a pop in the after hours. So same again, I looked at Pinterest earnings, I thought they were okay. However, I think once again, it's the monthly active users that are helping it go up. And same again, very much like a Meta platform, I think it's quite cheap, and I think that's why also it's probably popping up. And we go to PayPal. PayPal is up slightly, 3%. Once again, it kind of goes down to the same lines of Pinterest and Meta. I didn't think PayPal earnings were that good, and it is up slightly. And once again, I think it's very much like a Facebook situation. I think the reason why this is doing okay, even though the earnings were not great, is because it's just priced so low. So if we look at PayPal's earnings, they had an EPS in line and the revenue beat by a slight little bit, 90 million. Grew 7% year over year. Now actually in PayPal's earnings, they actually cut their outlook, and their outlook was decreased by quite a bit, and the profit side of it was decreased by quite a bit. And this is why I was really surprised to see PayPal still hold up. When I saw these earnings, I was like, oh, as well with how much PayPal has been beaten down with the last 2 quarters of reporting, not great earnings and the stock going down. I was actually really surprised to see PayPal do okay after hours. So, I mean, PayPal for me was probably out of Pinterest And Facebook is probably the one that I would say was the one that was disappointing. You know, Outlook being cut, earnings were okay, but Outlook being cut, I would have said that potentially, I would have, I'd probably give Pinterest a 5 out of 10. I'd give Meta out maybe 5 out of 10. PayPal, I probably would have gone maybe 3 out of 10 for their earnings. Same again though, it's not being really punished on the share price, and maybe I'll have to dig into it and see if there's something that I missed, and maybe there's something that's actually causing the share price to do okay. But yeah, I was quite surprised to see this hold up, and once again, maybe it's just because there's so much negativity priced in. And like I said, even if this outlook that PayPal did give, this is the big thing, it's not me turning negative on PayPal, but the outlook that PayPal did give, even if PayPal did these numbers, when you do look at the valuation of PayPal, it's still pretty good. That's the thing, that's why I'm not worried as an investor, because even if they do them numbers, the company's still going to do well, financials will still do well, the company will still do well. It's just that previously the numbers that they were going to do before the outlook was cut, and this sort of valuation was just unbelievable. So yeah, that's my thoughts on PayPal, and that leaves us with the last one, which is the one that absolutely nosedived. So TDoc, absolutely slaughtered. $55, down 36%, going to open up around $35 at the moment, and it's going to put it down at a market cap of around about $5 billion. And this is after the stock was, in February time, a $300 stock. I mean, if you bought at $300 and you're down here, wow, that's a tough one to take, and it's just been downtrending for such a long period of time. And the thing with TDoc is I am surprised to see it drop this much after how much it's beaten down. That's a massive drop off after it's already beaten down so much. Now, TDoc's earnings. So there's a few things here. So first quarter revenue was okay, 25%. The net loss was so the net loss, if you take this non-goodwill impairment charge out, was okay. So that the revenue was good, the EPS was good from that point of view. Now, they took a 6.6 billion non-cash goodwill impairment charge. Now, this was to do with Livongo, which I thought it might have been. They made an acquisition of Livongo, which you can see here, which was on August the 5th, 2020, which they paid 18.5 billion for. Now, the thing is, as well, is when you look at that 18.5 billion and you look at what TDoc is valued at, which is 9 billion, potentially today 5 billion, that was a massive purchase, and they paid, without doubt, they overpaid for Livongo, and now that's coming to bite them back a little bit. And obviously they took a goodwill impairment charge on this cost of buying Livongo. And this is why a lot of big acquisitions, mergers, are always viewed negative. You probably see this when a stock comes out, or a company comes out and buys a big buyout, a big acquisition, you'll always see this stock probably nosedive off that news, because everyone gets a bit worried, like, oh, that's a big purchase. It's quite hard risk to make that. It's a bit of a big risk to make that acquisition work, and Livongo is exactly that for TDoc. They paid over the odds for it. It looks like Livongo hasn't worked out as well as what they hoped. It's definitely not been as successful as what Livongo was when it was on its own before TDoc bought it, and it's an acquisition that isn't pulling up to the potential that Livongo paid for. And now what's happened is TDoc have taken a goodwill impairment charge of 6.6 billion on that purchase of Livongo, and that's obviously going to hit on the balance sheet, not an actual physical loss of 6.6 billion. So obviously that's important to remember, but at the same time it's important to know that that is obviously not great, because it clearly states that Livongo was massively overpaid for and not doing as well as what probably TDoc hopes it to be. So that's probably negative number one. Negative number two was full year guidance. Full year guidance was not great. They had a bit of a downgrade in the guidance, not by much, but a bit of a downgrade. They said that there was some headwinds. I believe, if I can remember correctly, I'm trying to go off memory here, but I believe the two headwinds were Livongo, which obviously follows on from what we were just saying there, and also I think it was the mental health category was having some headwinds. So that two headwinds caused the guidance not to be great. And also the big thing as well is the net losses. For me, I was looking at TDoc and hoping they were going to start reducing some of them net losses in the coming few months and years, At the moment, it doesn't seem to be happening, and that's probably my one concern with TDoc, is that they really do need to start pulling back some of these losses a little bit now. So that wasn't great either. So the actual quarter from TDoc was not bad, but it probably has had such a drop because of the goodwill charge that they've had, and also because their guidance as well. And the thing is, well, compare something like a Meta, Pinterest, PayPal, TDoc itself. What is TDoc? Well, it is pretty much a growth company. So if you have a growth company at the moment which is massively out of favour, that reports something like this, and obviously has revenue outlook cut, not by huge, but cut your outlook slightly, then obviously that's probably going to hurt your stock a huge amount, and that looks like what's happened. I have to say, like, I don't think, obviously when you take that into consideration, not great earnings from TDoc. Once again, I'd probably give this one probably a 3 out of 10ish, something on the lines of PayPal. Probably deserve to go down off these earnings. However, I've got to say, a 36% drop, I don't know if that's justified. And that's what I'd say on that. I think the drop off in TDoc today is probably an overreaction. I don't think it deserved to drop that much. So I would say that the earnings weren't great and it probably deserved to drop. But these earnings weren't any worse than what I'd say PayPal is, and the stock has been punished by 36% drop off. And you got to remember as well, like, how much the share price has already lost. You know, we're already talking about $55. Last time we were $55, you know, was around June 2018. If we drop down to $35, we're going to be back at January 2018. You know, that it is a massive drop off here. And if you look at the valuation of TDoc now, you know, I mean, this isn't even updated right now, but the company is going to be trading like at 2 times total enterprise to revenue, 2 times sales, and look at what this company's previously been valued at as well. So yeah, I feel like TDoc, not good earnings, a little bit disappointing myself. I would say that I would really like to see them controlling losses a bit more than what they are doing. However, at a 36% drop off these earnings, I think this is probably an overreaction, especially when you consider that it's not really trading at crazy valuations. So that's my thoughts on TDoc anyway. So yeah, just a quick recap of these 4 stocks report earnings. Hope you enjoyed it anyway. And yeah, I'll catch you in a bit.